Hello, I'm Dan Berger, President and CEO of NAFCU. I'm truly honored and privileged to have Chairman Patrick McHenry of the House Financial Services Committee join me today to talk about his agenda and his vision for the committee. Congressman McHenry represents the District 10 in the great state of North Carolina and does a wonderful job representing the folks down there in Main Street America. You know, Chairman, thank you so much for making time this morning.
Great to be with you, Dan.
Well, let's get started. You got a lot on your plate. There are a lot of issues percolating out there, especially with the inflationary environment and looming recession that's going on. What are your priorities as chairman of the House Financial Services Committee, and what do you hope to accomplish here in your first year?
Well, I think I have a general focus on innovation, opportunity, and oversight. And that's how I'd break down the key functions that I'm focused on for the coming 2 years. Innovation, look, I think we have to have a capital formation agenda that matches the needs of an economy that is in flux like we are right now, and a changing workforce. That means we have to have products that are available to the average consumer, the average investor, that look like the things that they seek. That means we have to change regulation in order to enable those things. We also need to enable small businesses to link up and get the capital they need to grow and survive in this environment. So we need to have both debt and equity products that match the needs of small business folks. So there's a key capital formation function here. We need to enhance our data privacy, the relationship that individual credit union members have with their credit union. They need to understand their rights in a digital world. We've got to update those standards from the mid-90s for data privacy in this technology world. And then finally, with the largest loss of assets of any asset class in the world of crypto, I think we've got to give regulatory form to this nascent industry that is potentially the baseline for a new internet. And we need to be at the forefront of that here in the United States. So those are my primary functions, and then in terms of legislation, and then oversight. The oversight of the Biden administration is something that I'm going to take very seriously, especially given the state of play with financial regulators and how out of step they are with society at large.
Well, I appreciate that. You since coming to Congress in 2004, you have a deep understanding and a deep knowledge of the financial services industry. To talk a little bit about your relationship with the credit union industry, but more importantly, what role do you see our industry having in communities in North Carolina and across America?
Well, the role you're currently having in communities is making sure there are a diverse array of options and there's real competition in financial products. That means that whether or not people are seeking a way to save in a modest way or a large way, if they're looking for products for their family, both from getting a mortgage to a car loan to getting financial products to enable kids to go to college, or whether it's small businesses and community institutions seeking ways to get the lending they need to get through these tough economic times, or to have an opportunity to grow. So I think credit unions are a key function of both my economy in Western North Carolina that my constituents and I experience, and to the national economy. And I think it's very important for us to have a healthy and competitive marketplace for lending products that enable communities and families to be able to make choices for themselves. That's what I'm looking for. And that competition is a very important thing. It's very important for robust lending standards and competitive rates. And so that's what I'm looking forward to bringing in the next 2 years. It's that focus on really making sure that we have a competitive marketplace.
Well, thank you, Chairman. And so you're speaking to the entire credit union industry now. So what is the one thing you want credit union leaders to know about you?
Not listen. I think that's the most important thing for any leader, is to listen. And that's not just when you come up for annual visits, but when I'm at home meeting with community leaders, I'm listening to my constituents, and I'm trying to be a better policymaker year over year. And by listening to my constituents and to listening to those that are experts in the fields, like you, Dan, and your members, that helps me to be a better policymaker.
Yeah, my in-laws live in Western North Carolina, and they say they see you out and about, mingling with your constituents on a regular basis, and then that's really important. And I know from NAFCU's standpoint, you've been terrific. And we may not always agree on issues, but you always listen to our point of view and our data and our facts and stuff. So we really appreciate it. You mentioned data privacy a little bit earlier. A comprehensive data privacy standard is a priority for NAFCU and quite frankly, the entire credit union industry. What steps have been taken or should be taken to ensure consumers' financial information is protected?
Well, first, people need to understand their rights to their own data. In the financial world, it's significantly different than in the general world of the internet. There are responsibilities that financial firms have, not just to their customers, but to their regulators. And they also have a duty to preserve certain pieces of information for their regulators. And so that balance here is something we have to strike very carefully and separate from the rest of the economy for financial firms. And so that balance is something that we're seeking to ensure that we have a correct understanding of. And then we have to modernize the standard in connection with the technology available. The computing power that was available in the mid-90s when they wrote Graham Leach Bliley, that created this national data standard for financial firms, is significantly different than what is available to today. And that's before we even talk about a world with artificial intelligence that understands textual differences and can tell you very elaborate, detailed pieces of information. And so I think it's important that we update those standards in connection with people's understanding of their rights in this world, in a modern digital world, but also in connection with the computing power available to us today. And that's why we're trying to take this generalized update of what is an existing standard. This is not something writing anew. It's not creating a whole new fabric of financial regulation or data regulation. It's about updating it and making it in connection with the current economy and the current marketplace.
Yeah, we appreciate it, but what about entities that are being hacked and the data breaches? How should negligent entities be held accountable for those data breaches?
Well, a data breach is something that is my colleague Blaine Lukemeyer has worked on data breach policy in previous Congresses, and that's something I hope that we can tackle there. What we see now are malicious actors globally and at the state-sponsored level internationally, taking action against large and moderate-sized financial institutions here in the United States to get the data and also to use different mechanisms to get paid for their hijacking of our data. That is a separate and broader set of issues that we have to wrestle with when it comes to hacked and and other data that's being manipulated and stolen from us.
Well, let's switch gears a little bit, if that's okay with you, Chairman. Talk a little bit about the political angle combining with policy. With a split Congress, what issues do you think lawmakers are most likely to find common ground or compromise?
Well, history has shown that data privacy, capital formation are two areas where there's cross-party interest. And so history's on our side in terms of policy making in a divided Congress on those two matters. In 2012, I was a part of the group that helped write the Jobs Act. And the Jobs Act came through a Republican House, a Democrat Senate, and got signed by a Democrat president in the Rose Garden in a presidential election year. So we can pull off big policy. It takes a concerted effort, and it takes a willingness to reach across the aisle to see a good and healthy idea become law. And so that's my intention, is to take digital assets, data privacy, and capital formation and take that similar approach so that we can unlock not just good ideas, but solid policy that becomes law, and long-standing law that can have a positive impact on society.
So, Chairman, you're known as not just the financial services expert on Capitol Hill, but you have a broad breadth of knowledge in technology. So as the financial services sector continues to grow and innovate to meet consumers' wants and needs, what are your thoughts on fintech partnerships and the balance between a level playing field and regulation without stifling innovation?
Well, I think that is a very important thing for the industry. I think regulated financials benefit from partnerships with technology firms, and technology firms benefit through partnerships with regulated financial firms. There's a great deal of expertise in these regulated financials. Each credit union has a massive amount of intellectual property and skill in operating in a complex environment to serve their members and do so in a profitable way, or a smart economic way at the very least, and do so in also a regulated, complex legal system structure. And so technologists can bring to bear new ideas and computing capacity that these credit unions currently don't have access to. And so what you're doing is taking a financial technology and enabling it in a regulated industry. That doesn't mean you're offloading regulation or you're getting less regulation out of it. You're actually getting greater regulation for this new technology. You're not actually exporting to a low regulatory sphere. You're actually importing into a high regulatory sphere. And so that's my notion with bank and credit union fintech partnerships. When you have regulated firms that have that expertise brought to bear, matched with technology which consumers are demanding, average members of society think and have an expectation that every person they deal with has the same capacity as an iPhone has capacity. And so they have high demands for technology and access to technology. We got to make sure that we meet that. Because if we don't meet that in a regulated sphere, they're going to go to different ways to get access to the marketplace, which will not help the consumer, which will not actually be in a regulated sphere. And so, look, I think the Obama administration came to a reasonable compromise here on fintech partnerships. And I think that's what we should continue. And I think that has brought us enormous good over the last roughly dozen years.
Yeah, we agree, because credit unions and community banks and other small financial institutions just don't have 200 technologists at their headquarters developing software and things like that. So they have to partner with fintechs in order to your point, bring frictionless banking services to their smartphones and stuff. So we agree those partnerships are really important. The term fintech got commoditized over the year, and of course it means something different to everybody, but you're exactly right. Those partnerships need to continue on. Switching gears.
Well, but also important to note, for cyber threats, very few financial firms have the wherewithal to develop cyber protections at the scale necessary to protect our financial assets. And so I think it's really important to maintain that partnership mentality so that we get the best technology to protect our financial assets, whether it be different pieces of technology or just something as raw as a cyber protection.
No, that's a great point. I appreciate that because that's probably the number one issue that when I speak to credit union CEOs around the country, that's the one thing that keeps them up at night. That's the biggest concern at their institution is cybersecurity and keeping their members' assets safe and protected. Switching gears, let's talk about my favorite agency and your favorite agency, the CFPB. Your committee has important oversight jurisdiction over the CFPB. What are your thoughts on the CFPB's current enforcement strategy?
It's terrible. What you have is a current director who is trying to make headlines for some further office down the line, rather than actually doing what the act that created the CFPB demands. And regulation through enforcement is a terrible idea. It has a negative impact on those that are regulated and leaves the consumers in the lurch, just waiting for a regulator to go find a new headline. And so what we need to have are clear rules of the road, and we need to measure people against clear rules. And when they fail to comply with those clear rules, they need to be held to account. That is how we operate in the United States. Clear rules of the road, not a set of secret regulations that we find out about only after the fact, or reverse engineering a set of rules so that you can implicate people. That is not how a free society operates under the rule of law. And so we need to hold the CFPB accountable for their decision making. We need to bring clarity to this marketplace so that firms and consumers have the type of protections they need. And we need to make sure this agency is held to account so that we can actually truly protect the consumer.
Yeah, we look forward to your weekly oversight hearings that you'll be having in the committee.
Yeah. Yes, I think the cadence will be quite significant.
Just all joking aside, you mentioned a little bit earlier crypto. With all the recent turmoil in the crypto space, do you still see a future for digital assets? And do you think there's an opportunity for legislating and regulating this space to actually pass?
Yes, I think it needs to happen. First, we don't have a functional definition of what is a digital asset. Second, we don't have a regulated means of exchange. Third, our existing regulated financial firms seem to be expressly prohibited from holding these assets like they hold many, many other financial assets, whether they be securities or commodities. There should be a mechanism to hold these assets by existing regulated firms. So we've got a lot to clear up in order to protect the consumer and to also ensure that we have innovation here in the United States rather than driving it overseas. So I think there's enormous potential for legislating, and I still think there's enormous potential for the technology to provide a variety of solutions to what we commonly call Web 3.
That's great. We actually have numerous credit unions providing this service through a third-party fintech. because they saw so many outflows, whether going from their institution to, say, Coinbase or Robinhood or whatever it is. And so they wanted to build a moat and offer these same services, not to hold the assets on their books, but provide the services because their members were buying it anyway, and they could provide the same service at a cheaper price. So we have some members looking at that and doing it in a very responsible manner. It's not for everybody. We're not pushing it out there, but we feel that credit unions should have that option. If it fits your strategic plan and your business plan, your business model, you should have that ability. So your comments on the digital assets are appreciated. Is there anything else you would like to tell the folks in the credit union industry before we sign off here?
Well, thanks for what you do on a daily and weekly basis. It makes our economy stronger. It helps families in key ways and communities in key ways, and that type of difference is what separates us from every economy around the globe. A diverse array of financial products offered at the community level unlock economic potential like nothing else can in a free society. And so thank you for what you do as credit union leaders, and thank you for what you do for my constituents in giving them options and opportunities so they can live the life that they seek to live. So thank you.
Chairman, on behalf of all the credit unions and our members in the great state of North Carolina and across the country, thank you so much for what you do. We look forward to continuing to work with you, and we'll be in touch. Have a great day.
Thank you, Dan.